Hello friends, welcome back. Today we will deep dive into India's largest pure play green financing NBFC company called as Indian Renewable Energy Development Agency Limited, which is also known as IREDA. It is a government owned financing institution under the Ministry of New Renewable Energy of India. Established in 1987, IREDA plays a key role in promoting, developing, and financing renewable energy and energy efficiency projects across the country. It provides financial assistance to various sectors, including wind, solar, hydro, biomass, and energy efficiency projects. IREDA has been instrumental in supporting India's transition to clean energy and achieving its renewable energy targets. Can this company become a multi-bagger? Let's find out the answer. And one more thing, try to watch this video until last.
Particularly aligning them with Viksit Bharat Vision or Developed India 2047 and how India is charting its course to lead the global energy future.
2047, India's population will be 1.7 billion. And by that time, our industrial requirement of power, requirement from the building sector, requirement from commercial sector, even for public consumption, So building, industries, commercial, transportation, India will need a huge quantity of energy. In fact, it should be some 3 times the installed capacity of 460 gigawatt we have now.
Yes, it is true that Indian population is going to be in uptrend and there will be a huge demand for electricity. But how it is going to help for IREDA? Whether the government is very optimistic about the green energy, let's find out.
India stands at a crucial juncture, a nation poised for a transformative energy revolution. This year's budget directly fuels the nation's ambitious renewable energy targets, channeling significant funds into the sector. Finance Minister Nirmala Sitharaman has raised allocation for new and renewable energy sources by 9,251 crores to 26,549 crores.
But Government of India have announced 1,800 gigawatts of renewables by 2047. So today, if you look, the per capita consumption of energy of an Indian is 1/3 of the global average, somewhere around 1,200 kilowatt hour against a global average of 3,400. Now, by 2047, India's requirement is so huge, and that is why, in the Energy Week, we're talking about 100 gigawatt of atomic energy, and Prime Minister Modi in the USA is talking about, the SMRs, modular reactors, will be so high that we have to have a variety of things in place, and we are in the right direction when we say that 1,800 gigawatt of renewables, 100 gigawatt of atomic energy will be in the basket. But today, if you talk about the USA, for example, big data companies, they are going for small and modular nuclear reactors. France, for example, entire country is managing through nuclear. So India has to have a good mix, and India's target of 100 gigawatt, I think, is in a very sound footing. And once we, get more and more of nuclear, also the cost factor will come down.
Solar now constitutes 47% of India's total renewables capacity. Utility-scale projects spearheaded by states like Rajasthan, Gujarat and Tamil Nadu contribute a massive 18.5 gigawatts. Even domestic rooftop solar adoption, often a slower segment, has seen 53% growth, adding 4.59 gigawatts. This year's budget has now further allocated 242.24 billion rupees for the solar sector. This includes an 80% rise in outlay for the PM Surya Ghar rooftop solar scheme, which will now get 20,000 crores for FY26. Green hydrogen has been another major focus area for the Modi government. The budget has doubled funding for the National Green Hydrogen Mission to 6 billion rupees. India's National Electricity Plan, or NEP, targets increasing generation capacity to 900 gigawatts by FY32. Of this, 615 gigawatts will be from non-fossil fuel sources. This ambition dwarfs the current installed capacity of 457 gigawatts as of November 2024.
India's renewable ambition target to generate 900 gigawatt by 2032. At present, it was 457 gigawatt. Within next 7 years, almost doubling its capacity. Not only that, in that 615 gigawatts from non-fossil fuel source, which means 615 gigawatts from green energy. If it is so, why should I want to invest in IREDA? I can invest in solar manufacturing company which could contribute 47% of renewable energy production.
Now we've got a very ambitious goal of 100 gigawatts, but it's first, before we get into that, I think it's important to realize what are the big advantages of nuclear energy, especially coupled with wind and solar. The base load of wind and solar combined, and that too on an aggregate basis, rarely crosses 50%. So 50% of the time you don't have either wind or solar. On the other hand, nuclear energy could easily give you a base load of 90%. And that will become an absolute essential if you've got to balance the grid with the fluctuations that come about with wind and solar. The one thing I think a big change is going to come about is with these small modular reactors. The greatest thing about a small modular reactor is you could build it on site, you could put your nuclear energy capsules in it, you can seal it, and then it doesn't require to be open for the next 10 years. So you can actually construct it and transport it to any region or any particular entity which requires, let's say, 300 megawatts. And that is what your SMR would give. But the very important thing, I think, is without private sector participation, it will simply be impossible to meet the kind of needs that we feel it should be met.
Okay. So is that the reason, Mr. Priyadarshi, that this year's budget has provided a policy thrust, a massive push for small modular reactors or SMR that Tripathi sir talked about? And do you think with that, nuclear energy can be an important, perhaps is already an important element for India's energy transition strategy, given the concerns that are related to its safety?
Look, I think nuclear energy is a very, very important area and needs to be the focus of our energy mix and of the energy development over the next, maybe a decade and a half.
So in that case, what role will green hydrogen will play in global energy platform by 2047?
Because green hydrogen, while important, and green hydrogen, while we obviously need to focus on it, will, as things stands now, will contribute a very small percentage as we move ahead. But it's also important to realize that green hydrogen today is where solar energy was maybe 15 years ago. Lots of skeptics around, lots of people questioning the costs. And yet, if we look back now, we find that solar energy, cost of panels have gone down, cost of production of solar electricity has gone down, and therefore, that is the reason why our solar production capacity has gone up about 30 times in the last 10 years.
My God.
So we've got to concentrate on the electrolyzers as far as green hydrogen is concerned.
And green hydrogen mission is, that 19,400 crores from government of India. We have made good progress in the R&D front, where the steel companies have taken up projects to find out how green hydrogen can be used in the difficult to reach sector, like difficult to reach in the heavier transportation sector, cement factories, steel. That research is going ahead. But globally, quite a few big companies have slowed down in the green hydrogen front because the cost is prohibitive. But as you know, even in solar, at some point when Honorable Prime Minister was Chief Minister of Gujarat, it was 19 rupees per kilowatt hour. Today it is 2.5 rupees or 3 rupees. So I'm sure that the same thing is going to happen in the front of in front of the green hydrogen.
Almost every day there is a new technology change. Like 10 years before, solar energy was very costly and now it was very cheap. Like that, green hydrogen or nuclear energy may come in the future. Investing in a single energy source will be a catastrophic for our investment. So whatever the changes going to come in the coming future, IREDA can survey. And I believe that there will be a good returns for the investor.
India's commitment is unquestionable, but the goal is not easy to reach. Doubling capacity requires a fundamental reimagining of the energy infrastructure and ecosystem. The scale of investment required would be enormous. Central Electricity Authority or CEA says India needs to invest $570 billion in the electricity sector by 2032.
Friends, the world is going through a crucial transformation. There is a growing realization that climate change is not just a matter of the future. The impact of climate change is being felt here and now. The time for action is also here and now. Energy transition and sustainability have become central to global policy discourse.
Company financial product and service. Company financing for solar energy, hydro, transmissions, biomass, wind, energy efficiency and ethanol, etc. So company offers like term loan, refinancing of loan, etc. These are all the company's financial and products and service. The most important is finance. At which rate company borrow money? The company borrow at 7.68% and yield on a loan asset was 9.96%. The spread was 2.28%. Interest margin was 3.33%. So debt to equity ratio was 5.89, which is slightly negative sign. So financial information for Q3 and 9-month FY 24-25. Revenue from operation has increased by 36%. Other income has increased by 56%. The total income has increased by 36%. The financial cost increased by 36%. Employment benefit expense increased by 1%. Profit after tax increased by 27%. Overall, the numbers looks very good. The company having a good diversified portfolio, it can reduce the risk of non-performing asset. Cash on bank around 222 crores as of December 2024. Year on year, the loan book has increased 36%. Overall, the total asset has been increased year on year by 25%, which is awesome. Now we will see what are all the advantage for the company. Number 1, government backup and policy support. Benefit from various government schemes and incentives for renewable energy financing. Number 2, focusing on high growth renewable energy sector. India has aggressive renewable energy target of 500 gigawatt by 2030, positioning IREDA as a key player in financing green energy project. Growing demand for solar, wind, hydro and bioenergy project ensure a strong business growth. Number 3, competitive and specialized lending. Providing a low interest rate compared to commercial bank due to it is focused on renewable energy. Number 4, diversified portfolio and risk management. Funding a wide range of projects, solar, wind, biomass, waste to energy and electric mobility. Low risk due to diversified loan portfolio across multiple renewable energy segment. Conclusion: IREDA is well positioned to benefit from India's renewable energy boom, government support and a strong financial backup. It is an attractive long-term investment for those looking for sustainable and high growth sector. And we should not forget to discuss about the disadvantage of the company. Number 1, dependency on the government policy. Any policy change or delay in the renewable energy incentive can impact its business. Number 2, company exposed at high risk renewable project. So default or delay in the low repayment for developers can increase the NPAs. Number 3, rising interest rate and funding cost. If interest rate rise, IREDA may struggle to offer competitive financing compared to private lenders. Conclusion: while IREDA has a strong growth potential, policy dependency, competition, credit risk, and operational inefficiency could impact its long-term performance. Investors should closely track its loan book quality, policy change, and financial health before investing. Friends, this is not any buy or sell recommendation. Please do your research before investing your hard-earned money. See you in next video. Until then, goodbye.